Well, good afternoon, everybody. Welcome to the August 10th, 2021 edition of Bull Sessions. My name is Mark Robertson. I am joined here by my dear colleagues Ken Kavula and Kim Butcher. Say hello, guys.
Hello, everybody. Glad to be with you.
Hi, guys.
And Kim was talking about being in the tropical storm. It's pretty tropical here in southern Michigan, and Ken tells me that he's 10 or 15 degrees cooler just a few miles to the north. So it's literally a sauna here with intermittent rain and high temperatures. So that is what we are faced with. Well, we'll have a fairly abbreviated session here today, but it's on a very interesting and potentially rewarding topic, I think. It's an area that's got some opportunity in it, and it has to do with finding and screening for banks, and we'll go through the return on assets approach as we go through this. And we are going to say goodbye to an old friend, Iconix Brands, here for a few minutes. But one of the things that I was kind of surprised that the search on return on assets screening for banks led me to a fair number of international companies. And Ken, I think you were probably a little surprised by that also.
I wasn't surprised that international companies showed up. I was surprised at how large the return on assets were, which leads me to believe that the models for some of these banks are really different than the models for a lot of the domestic banks.
You know, I think going forward we'll have to dig in a little bit deeper to see if we can't understand that a little bit better, because you'll see it when we get to the slide in a few minutes. The numbers are a bit elevated, so it'd be interesting to figure out exactly what is going on there. Let me get the legal stuff out of the way here. Here's our standing disclaimer. No investment recommendation is intended. This is an educational demonstration. It's all for the purposes of sharing the lessons and methods and analysis techniques of the modern investment club movement. It is for illustration and demonstration. We're basically going to show you the stuff as we've interpreted it over the years at Manifest Investing, and it is completely based on and consistent with the teachings of the National Association of Investors, now known as Better Investing. So we'll be expressing a bunch of opinions. We will be talking about real companies in real time, so please keep that in mind and do your own homework. And we will disclose when we'll attempt to remember to disclose when we actually hold a particular company in our portfolios. If you'd like to be added to the reminder list for the roundtable, although I'd be willing to bet that 95% of the people in attendance here today routinely attend roundtables. But if you do know somebody who'd like to be added to that monthly webcast reminder, please send an email to nkavula1@comcast.net. If you have any follow-up questions or suggestions for future topics, please send me an email, markr@manifestinvesting.com. All right, we are going to focus in on the monopoly banker in the form of a bull and spend some time talking about regional banks, focusing in on regional banks and where there may be some opportunity. We'll tell you why and go through that kind of stuff. I do look forward to digging into some of these topics, Ken, when we get rolling here in a few weeks. Probably will take next Tuesday off. I haven't decided yet, because I'm going to be sitting on the shores of Burt Lake in northern Michigan.
It's a good time to take a day off. We're actually going up north on next Wednesday, Mark. We're going to be in Traverse City for 5 or 6 days.
We'll have to try to get together maybe over there, because we've got.
Give you a call for lunch or something,
yeah,
right?
We've got some buddies over there. We should maybe have a joint session with Herb and Barb too. Be a good time. But we will be tackling a number of these topics in future weeks. We continue to crank away on the software update at the site, and I hold hope that will be in the next few weeks, that we can begin crunching out new features and that type of thing. Just a kind of a facelift on the website and a refreshing of the data. But if you have a topic you'd like to see us dig into, please let us know. We appreciate that. All right. I got lazy with this week's chart. I just wanted to put out there this is the value line median appreciation projection. It's not for the companies that are in the standard edition at value line, and literally it's stacking up all 1,700 companies and giving a combined forecast as if you had done an SSG on all 1,700. Right now, that forecast comes in at roughly 7 or 8%, as you can see over there on the right. And it has bounced up off of its lows. It had been percolating down a little bit lower, near historical lows, and now it has basically bounced up without a decrease in price up here, nothing significant. So what that is telling you is that, and it's not just limited to value line, the analysts that are covering these companies are ratcheting up their optimism again. So we probably get to watch them lose consciousness again. Ken, you think they can? Do you think that their reliability is in question yet, or will they go from stark pessimism to robust optimism once again?
Mark, the trying to figure out where they're going to go next is a very difficult task, and I'm not going to engage in that. I am very interested in the fact, however, that stocks that I had put on a list for possible infrastructure plays have suddenly taken really big jumps up. So evidently there's a number of people doing the same thing that I've been doing, but they've actually bought into some of these things already, even though the bill's only passed the Senate, it hasn't even been introduced to the House yet.
Mm-hmm.
But some of these plays are extremely interesting from my point of view. I talked about Plug Power and I'm not going to remember the other one.
Charge Point.
Charge Port, right. Last week, and I'd add Martin Marietta to that list. Boy, they've taken big jumps in the last day or two. So it's I think there's a whole slew of stocks that you might start to take a look at if this bill has any chance of moving through. It's going to be a slow process, and I think there'll be lots of opportunities to buy into the trend. It's not just going to be something that lasts a week, but I think that's part of what's going on, and I'm happy to see that we're going to finally do some investing in something that might make a real difference to a lot of people.
Yeah, I would agree with that. And I think we probably need to move up our research into electric vehicles and, the various areas that might be flying a little bit under the radar still. I mean, there's some areas that have drawn a lot of attention, in the mode of Tesla. But I still go back to wondering if, a company like Eaton or somebody that makes a whole bunch of the little electronic and electrical components that are going to be involved here. And especially as you look at a fairly massive change to the automobile, not just the American automobile, but automobiles in general and what that means. It's something that I really want to spend some time with while I'm sitting by the side of the lake next week, getting a little bit smarter on how much impact there is here, because
I'll throw another name into your pile, Mark. I listened for about 15 or 18 minutes to a pretty in-depth interview from the CEO of Emerson Electric, EMR,
yes.
And was really extremely surprised at who his customers were and the kinds of things they provided for their customers. Another kind of under the radar stock that you don't hear about too often and that you don't really think about too often. And then top that off with the number of people in the last 2 days since this bill has moved itself through the Senate, the number of people that have suddenly become very positive on General Electric. So there's two more that you might take a look at, might want to deal with.
Yeah, and I think we got to roll in Gentex and companies like Gentex and Matt Spielman. I'm pretty sure Matt's on the call. Matt has been talking about Luminar and some of the sensor technology companies. I think that it probably is time to try to find that company, because, again, it's the concept of, while all of the major OEMs are beating each other up, why not invest in the one that supplies to them all? And basically wins no matter who sells the vehicles.
I don't know if you remember, Mark, my adding Sensata to the roundtable portfolio 3 or 4 years ago.
Mm-hmm.
But I'm going to go back and revisit that company. They're a supplier of sensors. That's what they make.
Mm-hmm.
And it was a very interesting play back then. It had some production problems and got into a little bit of financial twistings and turnings, but I'm going to go back and revisit that company also. I forgot. I don't know the ticker of it, but it's Sensata was the name of the company.
Yep, I think it's ST.
ST, okay.
Yep. And Kim, are you still with us?
Yeah, I'm here. I wanted to say I just checked Construction Partners, call letters ROAD that I had presented at Roundtable.
Yep.
All the talk of all this infrastructure, the stock today is up 4.15%.
Nice. And now, have you continued digging into batteries and lithium and all that kind of stuff?
I have, and I'm waiting until one that I'm watching and following because they have applied to see if they can get on the NASDAQ.
Okay.
And once that one gets uplisted, I think it would be much better information to be given.
Okay. Well, we'll be digging into all those areas, and I think we'll probably cover it over a couple of sessions, much like we did a year ago. 2 or 3 good, solid sessions on it. All right, let's switch. Go ahead, Ken.
I'm going to tell you that if you're interested in Up Straight and Parallel, I stumbled just by accident into an industry that I haven't really done a lot with, and was surprised at the number of companies that were competitive. I had a long history of making money, and we're doing quite well, and that's in the auto truck dealership industry. So you might want to take a look at some of those companies. CarMart is one, AutoNation, CarMax, but those are well-known ones, but there's also a couple in there that most people have never heard of before that they might find extremely interesting, and really beautiful visual analysis going on, and not extremely high par values at this point, but in the 8, 9, 10%, which is decent for this market right now.
I think that's got to be part of a comprehensive look for sure. And in fact, I'll share my pictures of all the cars sitting where the Palace of Auburn Hills used to sit.
Yeah, I go past that once or twice a month. I know what you're talking about.
Yeah, GM has cars as far as you could see that are, I believe a lot of them are waiting for chips.
Yeah, all of them, I think, from what I understand from my contacts in the industry, all of them are waiting for chips, yeah.
All right, let's switch gears to one of my favorite topics. My selection of Iconix brand for the roundtable several years ago, and just wanted to share the fact that it will disappear from the database officially. They completed a buyout. Their shares did go for $3.15 a share. I think our equivalent price is well above that. I'm not even going to try to estimate what our price was, but it will disappear from all dashboards, and it becomes extinct. A friend did call and say, Mark, it's not necessarily rest in peace. This is kind of a zombie situation. Then you could continue to be haunted in the future. I mean, look at Krispy Kreme and other companies which have, returned. In fact, you sent me a ticker. Solar Winds is back. Obviously it wasn't a nightmare with Solar Winds. It was a dream versus the nightmare of Iconix. I did want to take this opportunity to point out that we can give Iconix, poster child credit for leading us down this path of recognizing the rule of 5 is a reality, and that there will be a stock that every once in a while just, in the case of Iconix, I laid out the perfect strategic plan for them. They just didn't follow it. And sometimes they don't work out. And what we basically did with this is implemented a policy of anytime a stock lags the stock market by 20 percentage points, we basically give it a timeout and consider selling it in the roundtable portfolio. And this has really done a nice job for us over the years. Here's, again, Iconix Brands was one of the first examples where we mentioned this during a roundtable. As you can see on the chart, it was basically bought at, I think it was like 26 or so. It proceeded to drop $6 in a couple of months, losing 20% while the market was relatively flat, as you can see it up here. And I had said at the time that I presented it that it was on a short leash, and if it didn't keep up with the market, we would walk away, and we did with a 20% loss. So we basically saved $800. A few months later, a couple years later, it was worth $266, that $800. And then the last time I looked, I've kind of blocked it out from my memory. I believe it was our $1,000 had turned into $12, Ken, if we had just continued to hold it. So I'll just kind of block that out. It's kind of an ugly thought. But again, it's this example of sometimes they just don't work out. And you have to have a discipline to walk away from them under these circumstances. This is another example of how many times can a stock lose 80%? Because this was on at least 3 or 4 where it lost 80%. And just a tough ride. So again, just the discipline and the thought, I think it's actually served us pretty well. We believe that this type of a discipline has added anywhere from 300 to 400 basis points. That's 3 or 4 percentage points to the long-term performance of the roundtable. So good stuff.
We're going to get people talking to us, Mark. You didn't mean that a basis point was equal to a percentage point.
No, 100 basis points.
There we go. All right.
Okay. All right. Any other thoughts on that, Ken?
Well, I want to keep in front of you and me and the audience, if they're interested, I want to keep this idea that we talked about just a little bit last week about maybe amending this rule and looking maybe at at 2 rules, one for core stocks and one for non-core stocks. I really think the rule has served us extremely well with certain kinds of stocks, but we seem to be wanting to break it on a pretty continual basis with certain kinds of non-core stocks. So I want to investigate whether we could maybe put down on paper what we've been doing in reality with our rule. We knew that it was due for growth and for maturation and for evolution. And maybe it's time to revisit our presentations and let the rule evolve just a touch to match what we've been talking about the last couple of years.
Yeah, it makes complete sense to me that we treat core and non-core differently in other areas, including some of the objectives when we purchase them in the first place. So yeah. It makes sense to have the 2. I just don't know what the answer to the puzzle is yet.
I'm not sure either, but I'd love to start doing a little bit of testing and maybe take a look at the ones we've sold and, which ones have come back and would we have classified them as core or non-core when we pulled the trigger to sell them. Those are the kind of things that I'd like to go through. I don't have access to the data, but I'm sure you can give it to me so I could take a look at it. That would be helpful.
Yep, we can certainly do that. All right. Moment for the women's USA women's volleyball team and their victory, which gave the United States the lead in gold medals on the last event of the Olympics, which just closed out. I do have a personal connection to this one. The young lady right in the middle is the daughter of a former work colleague. In fact, her mother worked for me in Chicago. And so I have followed her every step of the way through her volleyball career. And it's really, really a treat to watch these guys go to work and take home the gold medal for the first time in in Olympics women's volleyball. All right, so on to our topic for today, and I want to take us back to that moment in time about a year ago when you and I were shopping for our best small companies, Ken, and you probably remember this quite well. We kept seeing all these regional banks, and we kept asking, well, why are these all showing up? And, what's wrong? And I have to give you credit. You basically said, well, let's pay attention to them and heed them, and basically make sure that our best small companies contain a few of the best opportunities. And we are kind of seeing that a little bit again. This is from this morning. That first page that comes up at the Manifest Investing page when you click on research, hit companies, and then there's this standing sweet spot screen. And the regional banks are back. There's a few more a little bit further down the list. And these are probably worth some attention. But I'm really grateful that you did insist that we pay some attention to these smaller banks a year ago.
When we do 5 and 5s, Mark, at Ticker Talk, and we do Ticker Talk once a month through Better Investing, when we do 5 and 5s, we each get to pick stocks. I get to pick 2 of them because Ann doesn't like to pick 2 of them, so I get to pick 2. And I put Bank First Oklahoma into my 5 and 5 last Ticker Talk about 2 weeks ago. Certainly an interesting looking bank from the visual analysis and from the SSG. Certainly worth some time in, especially with a par like 14.2%. That's not easy to achieve in this market. As I just said 2 minutes ago, pars of 8, 9, 10 are pretty much the norm right now for a lot of companies that I'm studying. So to find one with a 14 par, that's extremely interesting.
Yeah, and again, the flashback to last year, because again, keep in mind that as we've been doing this best small company thing for a few years, Forbes had a policy of leaving the financial sector companies out. And we kind of pushed back against that a few years ago, and even more so a year ago. And with all these companies that were showing up, and man, am I glad we did. This is the current status of our 20 best small companies that were selected around Halloween a year ago. So we're coming up pretty close to the finish line again. We have about an 8 percentage point lead over the Wilshire 5000 again. I'm knocking on wood and throwing salt over my shoulder, Ken. But notice the banks at the top of the list, led by one of Ken's infatuations, Western Alliance. And
it's been a great investment, Mark, I'll tell you. And Virtus Investment Partners would not have been part of the Forbes study either.
No.
Any asset-based company would have been automatically eliminated. So the top 4 out of the top 5 or the 4 out of the 5 top companies that are remaining on the list are all asset-based companies. So they kind of pulled us through at the moment with I hope it's a winning percentage. We still have a couple months to go yet, so I won't try to jinx it. But
And I can't help but notice that Kim's favorites, LGI Homes, is one of her selections in the past, and biotelemetry. She presented biotelemetry to the roundtable not that long ago, and it worked out pretty well. So thanks, Kim.
You're welcome. Cha-ching.
Ka-ching, yeah. Biotelemetry was pretty good run there. All right. So again, the relevance of these small regional companies, and they're not followed by a lot of analysts, so you don't have a lot of that type of fervor going on with these companies. But when you can find one, especially one that can benefit from geographic tailwinds, if you want to think of it that way, can be a whole lot of fun. So Ken, here is no surprise here. I think the surprise for me was when I pulled up Ycharts and looked for regional banks in the database. There's over 1,000 of them. And I think we have about 100 banks in our database. So obviously there's probably some there that could be added. And I think this aligns fairly well with what you've been telling us about, what to look for in these banks. Is this consistent with what you've been experiencing as you do this stuff?
With a good bank, yeah. Absolutely. And to see in the top 250 out of, what'd you say, over 1,000 in the data, Mark?
Yes.
So the top quarter is running at about 115 or better for a period of at least 5 years, maybe 6 years even. That's certainly something to be kind of very pleased with. 1.5 is a superb return on average assets, and there's a slight difference in the calculation, so that Ycharts might be reporting a number that's slightly different than Morningstar is reporting on the Better Invest in data, because the Morningstar number that we're looking at is an ROAA number. It's a return on average assets, and I think it's a return taken by using the assets at the beginning of the year plus the assets at the end of the year divided by 2. Rather than a return on assets, which I think, and again, if you're somebody in the room that really knows finance, correct me if I'm wrong, I think ROA is taken just using the assets at the end of the fiscal year.
Yeah.
So, yeah.
I was just going to say, what you're talking about is kind of a form of smoothing, where if you have some ups and downs, I mean, you can obviously see there are some ups and downs. Here's some ups and here's some downs. Yeah. You know, with return on average assets, it's a little bit of a smoothing thing, but conceptually it's still looking at the same thing. It's just measuring.
Oh, absolutely it is. And I just want to, when you see a number that we might be using coming from Ycharts, I'm not sure that it will compare decimal to decimal with a number coming from Morningstar, because we are looking at the same concept, but slightly different calculations.
Yeah. And it'd probably be just a tiny bit inflated in an increasing trend. So,
yeah.
All right. So that's basically what we're looking for. So we're basically asking the question, well, among these 1,000 companies, which ones have the best return on assets? And here's your answer. This is the top 30. And what I've done here is just simply provided you, I know it's a busy slide, but you can take the deck and dig in a little bit deeper if you like. I gave you the numbers for each of the last years for the trailing decade, and we're basically looking at, this would be the current, that's probably the June or current quarter numbers for all of these companies, so the current return on assets. But as we signed off last week, we talked about how we really want the current or the relatively recent return to be strong. And then we also want the trailing 5-year average. You want a track record. You know, some of these are guilty of not having much of a track record, like look down here. Probably doesn't qualify for what we're doing, although they started out of the box pretty well, whoever that is, GBFH. So not enough track record. So you want superior return on assets for the current situation, hopefully an improving situation, and then you also want a decent track record. So what I did is I just simply took the current situation, added it to the 5-year return on average. You can see the numbers for the entire database are right here. And then added the two together. This one plus this one equals this one, and then ranked it just as a pure screening. So keep in mind, this is like brainstorming. You're just simply accepting the results and going to dig into them. Certainly not buying off of this list. It is a starting point for investigating a little bit deeper. What jumps off the page at you at this point, Ken?
Well, I'm struck, and you already mentioned it much earlier in the bull session, Mark, but I'm struck by the number of out-of-country banks that are showing superb return on assets. And again, I would want to know where this return is coming from. I mean, I see there's a Russian bank right beneath it. We had a Kazakhstan bank, which you underlined. The Grupo Financiero bank certainly is, in my mind at least, coming from outside the country.
That's Argentina. So is this one. This is also Argentina up here.
Yep. So I'd certainly like to know why the ROAA numbers are so elevated for so many of these out-of-country banks. And again, my instincts tell me that perhaps we're looking at a slightly different model, and they have other ways of getting fees or getting a return on their assets besides the traditional banking ways that come from domestic banks. So I would be careful with the out of country banks at the moment until we knew a little bit more about their models. But there are certainly enough banks on this list for us to take a look at. Enough domestic banks. Northeast Bank strikes me as somewhere near the top there, that NBN. And I pulled that one up on a stock selection guide. Certainly extremely interesting and a really, really nice visual analysis to take a look at. And I think you could do the same thing that I'm going to do, and that's go through these and see which one of these pop out in the SSG Plus. And of the ones that pop out, which ones have great looking visual analysis to top everything else off with. We'll be doing a deeper dive. Certainly the two banks that Mark and I were comparing during the entire last year, First Financial and Western Alliance, make this cut of top performing banks. I see PNC right there. That's a local bank in my area. So I'm going to certainly be looking at PNC. It's up 3 from Western Alliance, Mark. I'm going to certainly want to take a look at that one. And I guess the first thing that I'm going to do is go through the domestic ones and say to Mark, boy, I really like this one, the way this one looks. Could you cover it if it's not already covered? And that'll be something that I'm going to do as he sends me some spreadsheets and everything. So
right.
maybe we can get another 15 or 18 of these banks in the top 150, 200 banks covered. And again, I'm going to steer clear of the foreign banks, at least for the moment.
Yeah, I want to take a look at them very carefully, but I do think that there's some opportunity. I will tell you, Ken, I almost lost consciousness when I saw this, starting to take shape last night as I began preparing, because again, the objective was to find opportunities similar to First Financial Bank shares and Western Alliance, and
right.
I think we're doing that. I mean, I think we'll follow up with a domestic list, sorted to basically isolate that, because I do believe we're going to encounter difference in business models. The other thing I wanted to point out to everybody is there's 6 First Financials, so you have to be very careful about getting the right ticker. I mean, there's a First Financial something group, and then there's First Financial Bank shares, and then they spell the word bank, then the word bank with a C. So be very careful as you're tiptoeing through these 1,055 companies, because there are many that are very similar. There's an awful lot of First banks out there also. So just something to be aware of. The one that jumped off of here at me is Live Oak, because I had taken a quick look at that one, and they haven't had really good performance over the last couple of years. I wonder if that might be a little bit related to the energy situation, and because I believe they're concentrated down in the energy belt down in the south. But Live Oak Bank shares might be worth a closer look. But
yeah, I'm looking over at the data itself, way over to the right of the line, and the last 2 years have been either average or subpar in this metric, this return on assets metric, and that would be enough for me to put it in the bottom of the list until it was able to turn itself around. But I really think that this particular number, when you're looking at a bank, can help an awful lot. I guess I want to caution you also to beware just a little bit. This number shows up when you're studying brokerage houses, and the number shows up because brokerage houses have to report to the SEC the same way banks do. But nobody in any position of understanding, from my point of view at least, has been able to give me a good benchmark, a good rule of thumb for what's a good number for return on average assets for a company that has a large banking contingent but does a lot more business other than the banking. So while Charles Schwab and Raymond James and some of the big brokerage houses are going to show this number, please don't use the metric of 1.5 being something excellent and 0.85 being average, because that's just not the case for those particular kinds of companies.
Yeah,
it's purely for banks.
if you yeah, the numbers that Ken cited, but if you can actually take the concept and extrapolate it to money center banks and brokerage firms, as you've suggested, you just have to use a different metric.
It'll have a different rule of thumb. Yeah,
a different benchmark, if you want to think of it that way. Maybe the number is 2.5%, or whatever the number is.
Right.
Here we're talking about regional banks, and so you have to make sure that your industry is consistent, and you're not bringing in somebody who does something highly unusual. And again, I'm going to take a closer look at Indonesia and Thailand, a couple of them that are on here, but I might actually take a little bit of an adventure, a little bit like
take a field trip and charge it as a business expense, right? Okay.
Well, Thailand sounds good. All right.
Yeah, except for the flight over there, and then I'd always worry about what the exchange rate is and everything else.
Yep, it is a long trip, but Wendy's made it a few times.
Matt Spielman is making a really interesting point, Mark. And he's telling us that in the EU, that's the European Union, many banks are charging people interest rather than paying interest on deposits. Yep. And that indeed would increase your return on assets if you're being charged for the privilege of storing your money in a bank. And that's essentially what's happening in Europe with negative interest rates right now. He says, even though people are paying to keep their money in a bank, savings are reaching record levels, and it's been going on for some years now. So there's one thing right there that we might take a look at.
And Matt's right, but I still don't feel any better about my 0.2% on savings accounts that we have. They're small. Don't worry, Ken. They're small.
Yeah. Tracy is asking, why are FFIN and WAL in bold? Tracy, those are just the two banks that Mark and I put into a contest a year ago. Mark challenged me. He said his bank was going to win, and I said my bank was going to win. And that's not exactly true. You had a different choice, didn't you, Mark?
Yeah, I took Great Southern Bancorp. That's just barely off this list.
Okay, the two that are in bold here are the two that I talked about owning at the last bull session. That's the only reason they're in bold right now.
Right. Yeah. Western Alliance is the one that bolstered the best small company portfolio. First Financial Bankshares was one that you selected for the stock panel in the Successful Investing Conference. So that one has had a spectacular return there also. All right, so I am adding a bunch of these to the database. I believe 17 or 18 of these were not in the database, and they will be the next time we do a refresh. I just wanted to show the audience roughly what type of numbers we're talking about with respect to growth and some return on equity figures that you see here. I also wanted to make the point that you see the amount of analyst coverage here typified by how many value lines there are on these companies. None of them are in the standard edition. And some of them go uncovered by Morningstar or even the analyst consensus. So again, you're talking about minimal coverage. Some of them don't even have one-year price targets out there on the far right. But from top to bottom, looking at the Morningstar numbers, they're pretty consistent and could be an aid in basically nudging us into studying some of these. Like I said before, Egypt might not be too crazy, and Morningstar seems to think there might be some opportunity there. The numbers are pretty decent here. And again, I'm not urging you to rush out and do this, but carefully consider it. And here's the Thailand numbers down here that seem to be calling out a little bit in terms of relative opportunity. And I am a fan of international investing, not simply for the purpose of doing it, but going where the opportunities are. And if they're not there, waiting for them to materialize. And the one at the very top of the chart is a domestic one. Ken and I were talking about it in the green room out of Kansas City that got some pretty good numbers there also. All right. So with that, here's your weekly update on the groundhog. I wasn't kidding when I said that Terry Greisinger is doing her best secretariat with the entry for the groundhog for this year. Has put a little distance between the field, but the field is largely unchanged. Lots of familiar names. Performance generally improving. A few more entrants beating the market, and just provided there as we can keep track. I do find it interesting that some of the rhinos are drifting down the list a little bit, like David Einhorn, who was at the top of the leaderboard not that long ago, and Abby Joe is also sagging a little bit there. All right. Any thoughts or comments, Ken?
Nope, I'm nope, I'm just knocking on wood and crossing everything I have to cross here. I'd love to keep two of my companies, two of my clubs in the top 10. That would be wonderful. So,
well, a steak dinner, bought for the scorekeeper might be really helpful in that regard. All right, let's go ahead and remind everybody that we do archive all of these sessions on YouTube on the Manifest Investing page. Bull sessions, the expected returns reviews, roundtables, and some of the educational conferences that we've done in the past. You happen to see the one most recently from May. Here's that stock panel we were just referring to. If you want to go back and take a look at those, you can also go back a year before that and see what we had some spectacular selections from May 2020 to go a little bit further down the page. But just a reminder that those are out there if you'd like to take a look. The other thing that I've done more of lately is go to the page and use the search function right there on that page to search for perhaps a particular ticker. And you can actually be taken directly to the presentations which contain it. So it can be a good thing. And we've got a little bit of extra time. We can stick around for a few questions, Ken. I will close with my annual shot of Burt Lake, which is one of the more majestic lakes in the state of Michigan. And this is what I will be doing next week. This is right outside the kitchen, and it's a tennis court right by the lake. Ken has been up and actually witnessed me conquering my foes. My foe is 3 years old. That happens to be my wife on the baseline there. But I show no mercy to Lincoln. He's now 6. He still gets no mercy.
do you beat him is what I want to know.
I have to continue taking my victories because he's coming hard. He's actually taking lessons, and it'll be very shortly he will be humbling me.
He'll be running you all over the court, you're trying to say.
But it's a humility that I welcome for sure. So with that, I'm going to go ahead and say thanks, everybody. We'll see you again. Like I said, I'll make a decision about next week here shortly and post it on the Manifest Investing site. But thanks for attending, and we will stick around for a few comments and questions.